Hello and welcome back. This is a beautiful Wednesday, and in today's episode, I want to talk about why most traders quit right before consistency and how you can be able to identify which phase you are in your trading. So the purpose of this video is basically to help you stay in the game long enough to win. So you realize that most traders don't fail because they are bad at trading. They fail because they quit right before the results start making sense, right? So I'll repeat that again. Most traders don't fail because they are bad at trading. They fail because they quit right before the results starts to make sense. And this is the scary part about it, or the scary part about this is that most don't even realize that's what they are doing. Okay, they don't even realize that they are in trading itself. Maybe some might have a clue, but again, that patience to wait until it start making sense. They lack that patience to wait until the results start making sense. There is a phase in trading that feels like failure. I have been there, but it's actually progress in disguise. So if you don't recognize this phase, you will sabotage yourself, change strategies, abandon discipline, and even quit entirely, even though you are closer than you think. So, this video is basically for traders who feel stuck despite doing everything right, see improvement but no consistency yet, question whether trading is even for them, or feel exhausted by the process. If that's you, then this video might be one that keeps you in the game. Make sure to watch until the end. So let's begin this. Remember, maybe I can give you a very an insightful point up front. Lack of consistency does not mean lack of progress. In fact, inconsistency often appears right before consistency. So there has to be inconsistency before consistency. So because your awareness has increased faster than your results, that gap is where most traders quit, and that's the gap that you really need to realize so that now you can be able to bridge that gap. So let me give you the four phases that every trader goes through, right? And the first phase is unconscious incompetence. All right, the first phase. And as I'm sharing these phases, these are the phases that I've been into. But I didn't realize when I was in those phases. I later came on to realize after I have endured some of these phases. So the first phase is unconscious incompetence. This is the beginner phase. You don't know what you don't know. Losses don't hurt as much. Confidence is often too high. You remember me sharing a story. When I began, I just wanted to see trades running in my MetaTrader 5. So I didn't care much if they were in profits or they were in losses, but of course, a majority of them were in losses. So the reason why I was saying in this phase, losses don't hurt as much, but confidence is often too high. So you blame the market, you blame the broker, you think success is just one strategy away. But ironically, this phase basically feels exciting, right? This phase feels very much exciting. So you'll start blaming the markets, or the market has manipulated, or the brokers manipulated your trades. Such kind of blame game, right? Because what you're thinking is that success is just a strategy away. Of course, it's somehow it's a good thinking because it helps to build the consistency here, or it helps to build the confidence here. Because in this phase, you have seen confidence is so high. But again, the irony about this particular phase, like I said, it feels so exciting. You are losing, but it feels so exciting. And again, the confidence is so high. You can imagine in such kind of a phase. The second phase is conscious incompetence, right? Remember, we said the first one is unconscious incompetence. The second one is conscious incompetence. And this is where most traders live and suffer. So you now see your mistakes, you begin seeing your mistake, you begin understanding the structure, you know what you should do, but you don't always do it. Am I speaking to you? You know your mistakes, you understand the structure, you know what you should do, but you don't always do it. When you incur losses in this phase, losses hurt more. Mistakes feels heavier. Self-doubt creeps in. This is the most uncomfortable phase in trading, and it's where most traders quit in this phase. How I pray that you don't quit, that you'll be able to transition to the third and fourth phase. Before I share the third and fourth phase, make sure you like and subscribe if you have not, and also share this video with someone else who might maybe probably benefit from the same, right? So the third phase is this: conscious competence, right? Conscious competence is the third phase. So you are starting to execute correctly and on purpose. You start following your rules, but it takes effort for you to be able to follow those rules. You still make mistakes, but this time around, they are fewer mistakes. You see consistency sometimes, not always, but sometimes there is that consistency. You can be able to maintain consistency for some time, right? Okay. So one of the other key things with this particular phase is that it feels very slow, because trading the right way feels slow and it feels boring, by the way. So you feel like the process is very slow because you have to wait for those good setups, right? You're not taking just each and every setup. So, and again, the progress feels very fragile. Okay, in this phase, the progress feels very fragile. I believe you can relate with this. But this is where now hedge is being built. This is where you're building your hedge as a trader. And then now there is the last part, unconscious competence. And this is the very best one. This is mastery, whereby execution feels natural, decisions are calm, losses don't shake you, you are no longer emotional, you are procedural. Very few traders reach this phase, not because it's impossible, but because they quit in phase two. Okay? So those are the four phases. I'm not sure which phase you are in, but how I would like you to transition all the way from phase one. If you're in phase one, make sure you transition to phase two, phase three, and phase four. If you're in phase two, make sure you transition to phase three and then phase four. If you're in phase three, make sure you transition to phase four, right? And if you're in phase four, keep it up, all right? So, and why traders quit in phase two? Because you have seen most traders quit in phase two, because phase two is very dangerous. Right, phase two is very dangerous because of these two reasons that I'm going to give you. You know enough to see your flaws, so you feel like you know enough to be able to recognize your mistakes or to be able to recognize your weaknesses, but not enough to consistently avoid them. Hello. You know enough to see your flaws, but not enough to consistently avoid them. So you feel frustrated, you feel impatient, you feel disappointed in yourself, and also you might feel confused because of the mixed results. And here is the trap: your awareness improves before your performance. So you notice mistakes more clearly, you notice losses more sharply, you feel worse even though you're actually improving. Most traders interpret this as regression, but it's not regression, it's growth pain, right? Because every growth has to come with some pain. So, and with that, I will also share with you the three signs that you are closer than you think. The moment you start seeing these signs, the moment you start experiencing these signs, please note that you are closer than you think and you don't need to quit. Okay. So if these signs that I'm going to talk about are happening to you, please do not quit. Just keep pushing and you'll be able to see results. The first sign, your losses bother you more than before. That's not weakness, because most of the people say that it's a weakness. That's accountability. It's not a weakness, but it's accountability. You now care about execution, because if your losses start bothering you, of course it means you have to analyze and understand why you are making those losses. And if you have now, you're able to know why you are making those losses, you are basically building on or trying to rectify your weaknesses. You're identifying your weaknesses and trying to come up with actions that are going to help you overcome those weaknesses or turn those weaknesses into strength. And that's accountability, right? That's accountability. The second sign, you can explain why a trade lost. So if you take a trade, a losing trade, you're able to analyze it and you're able to explain why you lost in that particular trade. That means you're no longer guessing. Awareness, remember we said awareness precedes consistency. So you have to be aware so that now you can be able to build consistency. And the third sign is that you are losing small but still frustrated. Okay, this is huge, by the way. You are losing small but you are still frustrated. So it means risk control is improving because you are risking small, but patient hasn't caught up yet. Okay, so that gap closes with time, not strategy. Not for you to be able to change the strategy. Okay, so you have to give time, you have to give yourself some time to be able to close that gap. So don't start now hoping from one strategy to another. No, it's just you need to be consistency with that one strategy, but give yourself some time to be able to close that gap. Okay, so and you realize that most of the traders, they sabotage themselves at this stage, because this is where self-destruction happens. Traders in phase 2, they really sabotage themselves. And like I've said, this is the phase where distractions happens. And in this phase, traders often switch strategies, which is very wrong. They had so many indicators, if they're using indicators, again, which is a very big mistake. They increase risk to force progress, which is a very big mistake. They abandon journaling, they chase fast results, and they stop trusting the process. Oh, these are very huge mistakes that you can make in the financial market, in forex trading, in investing. So they mistake boredom to failure. They mistake growth for stagnation. And they start now to reset their learning curve again, right? So make sure that when you're in this phase, remember I did a video talking about Power One, whereby you can learn one strategy. You be consistent with one strategy at least for 90 days, with one asset at least for 90 days. So don't start switching strategies. Don't start adding extra indicators. Don't increase the risk basically to force progress. Don't abandon journaling. Don't chase fast results. Stop trusting don't don't stop trusting your process. Instead, keep trusting the process. Keep trusting the process that you're inputting, right? And you give yourself some time. You'll be able to transition now from this phase to the next phase, right? Remember, consistency is not built by restarting. It's built by refining. So you have to refine these mistakes. You have to come with ways to be able to avoid these mistakes. And that's how you're able to build consistency. So if you're in phase 2, or when you are in phase 2, when you reach phase 2, or if you're currently in phase 2, this is what to do instead. Your job is simple but not easy. So as a trader, trade small, trade fewer setups, Journal behavior, not outcomes. Stop optimizing strategy and start stabilizing execution, because consistency doesn't come from brilliance, it comes from repetition without panic. So, and the reason why I'm sharing this, these are some of the mistakes that I did, because I remember I almost quit when I was finally becoming dangerous. Not because I was failing, but because I expected progress to feel better than it did. Looking back, quitting would have erased everything I had built. And for those who have shared my story with, remember I began learning Forex from when I was working in the bank. Then now I started seeing progress. Of course, I transitioned now to I resigned from my banking job, and now I started majoring in the financial market in Forex trading. And if I look back, if I had stopped trading, I think right now I don't know even where I would be, my God. But I thank God that I didn't quit. I thank God that I got a good mentor to be able to carry me through. So even as I wind up, remember that we have said that most traders don't quit because they are hopeless, but they quit because they are early, right? They are early. That is early to consistency, early to clarity, early to stability. Remember, discomfort does not mean you are off track. Often it means you're on it, because if there is this phrase or old adage that says no pain, no gain. So this pain is part of discomfort, right? This pain is what is causing discomfort. So if you are not experiencing that pain, right? If you're experiencing that pain, it doesn't mean that you're off track, but what it means is that you are on it, you are on track. And what you need to do is to press on. Don't quit. What you need to do is to press on. Trust the process. Trust yourself. If team can do it, you can do it. If someone else can do it, whoever you look after, if they can do it, you can also do it. So how I pray that you don't quit. In the next video, I will help you to build a simple, repeatable trading plan, because once you know where you are in the journey, structure is what carries you forward. So see you in the next one.